Click record here. All right, welcome everybody to the first meeting of 2021 of the Wealth Management Association. It's good to see everybody. I know we got pushed back a week, but we're happy to have everybody here, and welcome Plante Moran Financial Advisors, Cam and Mallory.
Thank you. We're excited to be here too. I don't see Cam, but I think he's here.
I'm here.
Okay, perfect.
So, yeah, good to see you guys. So we got a couple announcements. Couple announcements real quick, and then we're going to hear from our new Spartan Journal news team before we kick it over to Plante Moran. So just brief announcements. There's been some website updates if you guys haven't seen that already. So we added a member resource folder. There's a lot of great things in there. So I know we've had a lot of people ask us about what they should be reading and books, newsletters, stuff like that. So we threw up a couple of reading lists, podcast lists, things like that. And you guys should definitely go check those out if you're looking to add to those reading lists. We've also updated the job board format as well as the Spartan Journal, and there's some awesome jobs out there. So I know Plante Moran is actually having their first ever sophomore exclusive wealth management event coming up in March. So we've got that listed on there, as well as a couple other cool postings. I know Morgan Stanley, this is the first time I've ever seen an internship that they're offering for a senior. So we've got that on there and a couple other things as well. So upcoming events, next week, we don't have any guest speakers. It's just going to be us, and we're going to be covering careers in financial planning and wealth management. So my other announcement here is about the Success Summit. And what we're going to be doing next week is kind of prepping you guys for the career fair portion of that. So just letting you guys know what the different career paths are, what it would look like to work for an RIA like Plante Moran versus maybe like a broker dealer or a wirehouse, something like Morgan Stanley. And we just want to make sure you guys know the differences and what the different career paths are in each of them. So Jake, if you could go to the next slide. I know Costa and Oscar, we've all been working on this, so I want to pass it over to them so they can say a few words about the summit.
Yeah, Oscar, I can go first if you want to, if that's cool with you.
See it off.
All right. So basically, the summit is going to be an all-day event on Friday, February 5th. You see the schedule here. So the morning is going to be a lot of sort of guest speakers, different breakout rooms, different areas of financial planning that these people specialize in. There's some pretty cool speakers, some sort of titans of industry that are coming and have volunteered their time. So that's super awesome. And then the end piece right there, you see at about 2:30, we're going to open it up for interviews and networking with some firms that are coming. I think we have a list of the firms that are coming. Oh, Plante Moran's coming. Advanced Wealth Strategies, which is a smaller RIA in Ann Arbor. Vanguard's going to be there. There's a bunch of them. They're all on the LinkedIn website for this.
Fidelity, TCF Bank, Raymond James, Total Investment Planners.
So super cool event, free to come to. Anybody who's looking for a job, or even if you have one, there's going to be a session for what to look for in like an offer letter and that sort of thing. So great event. It's the first event of its kind, I think. And it's going to be pretty cool. So plan on attending if you can.
I'll add that all those who are interested in the wealth management program, who might be freshmen and sophomores who haven't taken any classes yet, but you might have heard the CFP being thrown around in a lot of conversations, Certified Financial Planner, basically, the wealth management bar exam. So for anybody who's interested in taking that, we do have somebody from the CFP board coming to be a part of the diversity and inclusion panel. I'll be hosting that, but they're also looking to get an attendee list for after the event, because they want to reach out and start plugging their resources that they have for the exam. So study materials, career center, professional development, plugging you with people in the industry that are going to be more of a mentor role. So they have a lot that they want to share. So, if you're thinking about taking a CFP, but not really sure what's going on, this is a great opportunity to connect with the CFP board directly. And then for those, again, who are freshmen and sophomores who are trying to figure out what they want to do, this is a great event. For those who are a little bit older, juniors and seniors, this is also a great time to network with other student leaders across across several chapters. This isn't just Michigan State. We have Central Michigan, Eastern, Grand Valley, and that's only the colleges I can think of on top of my head. So this is honestly just a huge networking platform to get to talk to people.
Yeah, just one last thing I want to add too. Make sure if you do want to attend, you go on LinkedIn, look the event up and register, because you need to register to get like the links for all the Zoom sessions. So if you want to attend, make sure you do that before February 4th, I guess, so you can get all the materials. So cool. Back to you, Justin.
Awesome. Thanks so much,
Wait, the
guys.
scholarship.
Yep.
We're hitting
Yeah.
scholarships too.
Thank you, Oscar. That's all I was going to add. So they're giving away some $500 scholarships as well. So basically all you have to do is write a quick essay about why do I deserve a scholarship? Not really hard. So you guys should definitely check those out. And come support the Wealth Management Association, because your boys, Oscar, Costa, and I are all going to be hosting a session there. So definitely come show us some love and check us out. So. Awesome. Just real quick, last thing for me is I just want to welcome the new Spartan Journal News team for the spring semester. So everybody, if they could do the, little clap their hands for Jake, Nate, Matthew, Andrew, Varun, Nick, and Andrew. Guys, welcome aboard. We're very excited to have you. And tonight we get to hear our first ever stories from them. So I believe Varun is starting for us. I am going to pass it on over to him.
All right, yeah. So for this week, my first week, I wrote about the recently announced $1.9 trillion COVID relief bill. This is coming as some of the first of Biden's executive actions as he aims to curb the spread of COVID and provide vaccine accessibility. They've set a goal to vaccinate 100 million people in Biden's first 100 days in office. Yet the bill is receiving a little bit of Republican opposition because just in mid-December, there was a $900 billion relief bill that was signed. Yet Biden claims that any minor economic negative impact will be quickly outweighed by the positive impact that will come from slowing down the virus. As COVID continues to spread and mutant strains are now starting to be found, economic uncertainty continues, as well as uncertainty with the future. Now I'll pass it on to Andrew.
Hey guys, so for my story, I wrote about another executive order actually. In President Biden's first day in office, he issued an order that put a stop to the Keystone XL pipeline in the States. And the original pipeline served as a mode of transportation for oil from Alberta, Canada to Illinois and Texas and a few other states. And the proposition was that it would bring about around 830,000 barrels per day if it was built. And so this XL is an extension of that original Keystone. And that original Keystone was thought up in 2008 when oil prices were like really, really high before the recession. And Canada ended up approving this pipeline in 2010. But President Obama and the US government as a whole, they stalled out like talks about it and like through 2015 and through the end of the term. And the pipeline faced a lot of like negative press from a lot of different groups because people were worried about oil spills and the damage the pipes could do like to ecosystems. And actually President Trump actually approved the pipeline within his first month of office. And he issued a new permit that streamlined the process by disregarding like environmental due diligence. But following the results of the election, the company that proposed the pipeline, TC Energy Corp, they tried to salvage its standing in the States. And they offered $1.7 billion in spending on different types of renewable energy sources. But these spending goals actually weren't enough to sway the president's decision because he believes that this pipeline doesn't serve the best interests of our country. And Canadian Prime Minister Trudeau, he's been an avid supporter of the pipeline since the beginning, and he's been on record saying things about how, like, if you found a bunch of oil, it would kind of be foolish not to use it, not take advantage of it. So he ended up expressing disagreement with this decision. But based on the quickness with which Biden acts, with like on his first day of office, canceling the pipeline, in addition to rejoining the Paris Agreement, it seems clear to me that this administration's goals of combating climate change and moving towards clean energy is pretty clear. So that's all I've got.
Hey, so for this week, I wrote about the sectors that look promising after COVID-19. So the pandemic overall favored technology stocks like Zoom, Microsoft, Amazon, like Google and all that. And now that people are starting to get out and the vaccines are rolling out and the restrictions are being uplifted, people are starting to like get out more. And big thing I was thinking about was the airlines. Even though there's going to be a lot of increased traffic, I would consider this an aggressive investment because the airlines took on a lot of debt from COVID, and the oil industry. This is a big one because a lot more people are out driving, and even with the airlines demanding more fuel, the oil industry looks really promising. And the energy sector, especially clean energy. The IEA, it predicts renewables will overtake coal in the share of electricity generation by 2025. And yeah, now I'll pass it back over to Justin.
Awesome. Thanks so much, guys. Those are some great stories. If you guys haven't read the first edition this semester, it came out yesterday. Definitely go check that out on our website. So with that, I want to welcome Cam Tinsley and Mallory Griffin from Plante Moran, and we're really excited to have you guys today. Welcome.
Thanks, Justin. We're excited to be here. And just looking around, I see a lot of familiar faces and names, so nice to see all of you again. And ideally, we would have done this in person, like everyone says, but this works too. So for those of you that I haven't met, like Justin said, my name is Mallory Griffin. I am a manager in the East Lansing office. I've been with Plante for about 7.5 years at this point. I graduated from Michigan State in 2013 and have just been with the firm ever since. So always within wealth management. I do have the CFP at this point, so I know there's a lot of work that goes into that. So I think it's great that all of you are already kind of getting a jump start on where I was coming out of college. So with that, I will let Cam introduce himself.
Yeah, good evening, everybody. Like Mallory said, my name is Cam Tinsley. I work out of when we were in an office, worked out of the Southfield office right off 696. Right now, I'm currently in our Florida satellite office, I like to call it. I decided to be a millennial snowbird and come down here and enjoy the warmth and the palm trees. Been with the firm for about 2.5 years. Mallory is a CFP. I am what I like to say, an aspiring CFP. I'm currently studying to sit and take the exam in March. So kind of like Mallory said, we're kind of in two different phases of the CFP designation. So obviously want to open up for questions on if you guys are interested in what that entails. I don't know if a lot of you have seen kind of the email that Justin sent over that was from Mallory and I earlier today. We have a presentation that we can go over, but as Mallory and I were kind of preparing, a lot of the times we present on financial literacy, it's to high schoolers or it's to kind of other finance groups or other business groups that aren't necessarily, I don't want to call it not financially savvy, but they're not wealth management track students like all of you are. So, we could sit here and lecture you guys about a Roth 401k versus a traditional 401k and, what hot stocks are right now. But really want to kick off the new year and really just have you guys have an open forum, be able to answer any questions that you guys might have about the finance industry in general, kind of what Plante Moran does compared to others. I know we've kind of given our soapbox on what PMFA is, and we've presented many times to you guys and love coming here. So just want to kick that off to anybody that is brave enough to ask the first question. Can talk about budgeting, CFP, markets, economic outlook, all of the sorts. So, want this to be a discussion rather than our lecture. So with that, I will let the awkward Zoom silence begin.
Well, no silence, because I got a question already.
Oscar, my man.
So one big thing that, especially me and Andrew Hendren have been talking about, that's kind of a new development is kind of, I know you guys have heard about GameStop. I know you guys heard about everything that's going on in the market right there. But from a bigger perspective, how do you guys see this strength and concentration of retail investors kind of combating the usual institutional influence. I mean, I've never seen anything like that, for a stock to be crazy manipulated. I mean, I haven't seen more than 3 people in GameStop since maybe 2010. So to, see that happen was crazy. So do you guys have any sort of, thoughts on that from the professional perspective?
Ooh, that is a great starting question. I was hoping for the GameStop question. Glad that we could answer right away, Mallory. I don't know if you have something to kick it off, but
I'll be honest, I didn't know GameStop was still open. So I guess to your point, Oscar, I used to shop there when I was in middle school, but I thought they kind of closed like so many other like rental or DVD/gaming stores did. So I'm sorry, I don't have much there.
I think what we have seen with GameStop is similar to if anybody had looked into what Hertz stock did back when they filed for bankruptcy. They were trading, I believe it was for under $1 a share, and it skyrocketed on one single day for absolutely no reason. And a lot of the institutional investors, a lot of the advisors sit there and they go, there's really no fundamentals behind that. Everybody's just gambling on, oh, well, can a stock really go to zero? The answer is yes. We've seen stocks go to zero before. I think, to your point about retail investors, there's obviously a lot more market participants that have entered during the COVID environment. I think it's twofold. One, from being we have so many people locked down from home, trying to figure out how they can make money while they're unemployed. They can go up and open a Robinhood account and decide to start trading stocks and think it's, think that they're the next, Warren Buffett, because, stocks only go up, as our, Davey day trader likes to say. I think some of those big swings in a lot of those stocks are very short-lived. You see Hertz, those very short-lived. Again, GameStop is going bankrupt. So anybody trying to take advantage of a short-term price market fluctuation, I mean, kudos to them. They're able to take the $10 a share or $20 a share or whatever for the few days or even few hours that you see that price appreciation. But really after that, you don't see any sort of movement that people are making a ton of money off of. And I think from an institutional perspective, and we're not institutional investors by any means, but I think they kind of throw those kind of under the rug and say, okay, well, what are some advantages in other sectors of the market instead of individual stocks that we could take advantage of now? And really kind of put those one-off Robinhood stocks, as I like to call them, kind of to the sideline. Let those, let the Robinhood traders kind of duke it out for the few dollars that they get per share on those, and let it ride and kind of get back to some sort of, I don't even know if we could call it normalcy, but just some sort of normalcy on what we trade on. From the Plante Moran perspective, we're not stock pickers. We like to, we're mutual funds and ETFs. We like to take advantage of different, what we call sub asset classes. So whether that's large cap, whether that's growth versus value, active versus passive, international versus domestic, those are the types of questions that a lot of the bigger advising firms, a lot of the bigger institutional investors are really going after instead of those kind of one-offs. So hopefully that kind of answers your question. I wish I could tell you why GameStop went up so high, but really there's a lot of market fluctuations that really just don't make sense. And there's really no clear answers.
Yeah, I think that's really, I'm
perfect.
sorry.
Appreciate it. No, I was just saying thanks.
Oh, good. So I was just laughing to myself as Cam was answering this. I had a client needing a last minute wire for a house closing today, truly last minute. So it just completely ate up my afternoon. So I finally
I had one of those too.
What a fun day. So I just refreshed Yahoo Finance, and the second story says GameStop shares closed 92% higher. Like, I just completely missed this today. So it's a good timely question. So
yeah, Matthew, you put a message in the chat. Do you think a lot of this is rapid due to behavioral investing, like investing is one feelings rather than logic or reasoning? Absolutely. I think that's exactly what we're seeing. I think everybody just looks and says, oh, look, a stock tanked. There's something like, oh, a lot of the GameStop people probably were the same people that invested in Hertz and said, you know, I'm going to take a gamble at, 50 cents a share, $1 a share, and see if I make any money off it. And if I don't, I lose 50 cents on the dollar. Call it a day. So.
Can you see the chat, Cam? I can't see anything in the chat.
If you hover over and go over to under chat and just open up the box. Sorry, we're Teams users at Plante Moran. We're fancy Teams people, so Zoom is a little.
Yeah. So it's empty to me. So Cam, if you see any other questions there.
Oh, you know what? It's private. See, that's me not knowing how Zoom works.
Oh,
so.
Okay. Perfect. So
I really appreciate the perspective. I had one of my friends tell me like I invest like I have 2 kids because I don't like throw my money at some of these stocks. I'm all like, yeah, ETFs. I don't really buy individuals. And sometimes I'm like we learn all the fundamentals in class and we learn, we're long-term investors, passively invest, buy and hold. And then you see like all these people on the internet who just made like a quick 20,000 and in the week. I'm like, I want to make a quick 20,000, but it's,
I mean, so for everybody that's, talking about, oh, I made a quick 20,000, there's probably 10 that said I lost 50,000.
They're just not advertising it as much.
You have a lot of the big wins. Everybody's going to celebrate the big wins, but who celebrates their big losses? Nobody. So, you're going to take a gamble on a few and celebrate them as you should. Everybody made money on GameStop today, but whatever, go celebrate. But tomorrow's a new day for them because they're day traders of the world. Like you said, long-term perspective, have a lot of time horizon. It's more about where can we go in the next 5, 10, 15, 20. I won't get on the soapbox more, but yes.
Good question.
Yeah.
Yeah, I have a question for you guys. Oh, sorry. Go ahead, Vincent.
No. Go ahead, Parker. You spoke before me. You're good.
Okay, no worries. Well, first of all, thank you guys for both being here today. I'm super excited to be working with PMFA this summer.
Awesome.
And I guess my question for you guys would be, my dad is really into the IPOs lately. And I've heard a lot of positives and I've heard some negatives on getting into those. And was just wondering if those are something that you guys advise to your clients or what your opinions on those were.
Yeah, so I can start us off here, Cam. So I have a couple of clients that are very interested in IPOs as well. Typically it's companies that they know that they're comfortable with, that they use. So I had a client that got in on the Peloton IPO, whenever that was, however long ago that was. And so she's been so excited. Obviously it's done really well. And I mean, she talks about it all the time. Like it was her hot stock pick. And so she was super excited. I have another one that got in with Beyond Meat just because they're vegetarian and their whole family is vegetarian. And so they're just companies that they know typically. I would say we're not often bringing those to clients to say, hey, this stock is about to go public. We think there's an opportunity here. And that really goes back to something that Cam kind of touched on earlier. We're not stock pickers. We have a lot of clients that do hold individual stocks, whether it be because it was a gift from a family member or they used to work for this company. And so it was part of their, retirement package or something like that. Or maybe they were with an outside broker before moving to PMFA and there's just large unrealized gains in the position. So we decide to build around it for that reason. So we do have clients that hold individual stocks, but we're not typically actively recommending those. We prefer a much more diversified approach with mutual funds and ETFs or alternative investments in some situations than just picking individual stocks. Did that answer your question?
Yes, it did. Yeah. Okay. And kind of going off of that, I think another real quick question that I would have is, like as young investors or like as someone who's setting aside money to invest, you were saying that you like to diversify. Is that something that you would recommend for us too, or is it good for us to get some experience in those individual stocks? Or what would you say about us as investors?
Good question. So as a CFP and registered investment advisor, I just want to start off by like throwing out all the disclosures. I am not like giving formal advice, telling you to buy X, Y, or Z. But from my perspective, I typically take the approach that we do at Plante Moran as well. And I have since I graduated. I like the idea of holding mutual funds, and you can buy mutual funds that are still very concentrated. So they, are 20 stocks and it's still instead of just one. And really that's just because I'm not a day trader. Even in like my free time, that's not something I enjoy, is just like researching individual stocks and that type of thing. If I felt differently, I'd probably pick up some individual stocks, but for me, I'm perfectly fine kind of taking a more passive approach, at least for my investment accounts.
Yeah, I would echo what Mallory said too. I'm not personally invested in any individual stocks, not to say I might in the future, but I'm really thinking about, historically speaking, you can't outperform the markets in a long-term kind of time horizon. Me at young 20s, I know that I'm going to have a long time horizon before I start, dipping into my retirement fund or dipping into kind of what I call my long-term savings. So, passively investing in the ETFs and mutual funds, that's how I personally invest for me. That's not to say that other people are going to take advantage of the individual stocks. The kind of flip side to that is knowing your risks in one individual stock. Are we going to say that Apple, we're going to expect Apple to go bankrupt next year? No. But, there is a little bit more increased risk in taking on, the company risk, the business risk, those unsystematic risks, of holding individual stocks. So just knowing what those risks are, knowing your company, if you're going to go into an individual stock, instead of just looking at, what the top news or, what Barstool guys are investing in, making sure that kind of the root of, the fundamentals and the foundation of the company before kind of diving in deeper there.
All right, perfect. Thank you.
Yeah.
So Mallory and Cam, my question is kind of switching gears a little bit because I wanted to ask you whenever you're with your clients, between a Roth IRA and just a traditional IRA, what do you recommend your clients to go with? Because they're different, they're for retirement, but like what's like, can you like walk us through like how you decide of what's a better option for those people?
Yeah, good question. So I first, it kind of starts with their tax bracket. So if they're in a very high tax bracket right now with, one of the top couple, then it probably makes more sense to do a traditional IRA and get a tax deduction. If they're in a lower tax bracket right now and they're able to contribute to a Roth IRA still, then that's great. And that might be the recommendation going forward, at least for them. But it's typically more of an annual discussion and an annual decision based on, where their tax bracket comes in that year. I would say the age does play a part in that as well, or at least it can. It doesn't always. Trying to think of other considerations. Cam, anything to add?
I would say, so kind of going into a little bit more of a complex planning item, and I think, this group can handle it, given you guys are wealth management track, is instead of looking at contributions to Roth or traditional, when are opportunities to convert to Roth? So that is when you take kind of your pre-tax bucket of retirement savings, the ones that you've gotten that deferral on, the ones that once you have to start withdrawing at age 72, you're going to be paying ordinary income tax. Is there an opportunity to pull the tax liability forward in years where you have lower income and take advantage of the lower bracket to convert those funds to a Roth? So you take that, traditional IRA, you pay tax on the ordinary income, you throw those funds into a Roth IRA, and then all of a sudden they ride tax-free for the rest of their life. And for most clients that we do that for, they're never going to touch those assets in the future. A lot of those assets are going to be gifted or passed down in their estate. And anybody that inherits a Roth IRA doesn't ever have to pay tax on that as well. So that's really an active strategy that we use when we look at traditional versus Roth and I think 2020 was a great example of that. The CARES Act didn't require distributions from IRA accounts for clients over the age of 72, whereas every other year in 2021, as it stands right now, any client that's above age 72 is going to have to start distributing from their pre-tax IRA and take ordinary income. For a client that has a required distribution of 100,000, 150,000, 200,000, that's a pretty big tax burden every year. Is there a way that we can pull forward in years where they don't have to take a distribution and really kind of draw down that traditional fund so that their required distribution is lower and they have a bigger built up Roth account that they either, use for their spending or they gift to their, decedents and to the beneficiaries of their estate? Those are kind of the opportunities that I'm sure a lot of you are going to have to encounter in internships or full-time positions once you get there. So definitely would recommend looking into those opportunities as well.
Mm-hmm. Yeah, and
Thank you.
keeping an eye on opportunities like that, especially in a year like 2020, just adds so much value for a client beyond the fact like maybe they don't even decide to go forward with this strategy because they don't care to pay the taxes or they know what's going to go to their kids anyways and they're not going to spend it. So why should they pay the tax early? Whatever the reason might be for not doing it, it's still in their mind is just a huge value add that we're thinking of them even behind the scenes to bring this to them. It goes a long way with clients.
Awesome. Thank you.
Mm-hmm.
I have a question, guys.
Okay, you can go.
Oh, no, sorry. Go ahead. I can wait. I get to.
Okay, sorry about that. I was wondering what your guys' thoughts on REITs were. I've just recently found out about them and I've seen they haven't really performed well, like in terms of like in COVID years. But I was just curious, I guess, what the appeal is. I guess I don't really see it, but I've also only looked at it from a perspective when it hasn't performed. So I was wondering what your guys' thoughts were on that.
Good question. So I would say that we've evaluated it kind of at a high level within our investment committee. And then we do have some clients that choose to invest in REITs because they want more real estate exposure or something like that. I would say broadly, we don't recommend an actual allocation to them right now, just based on pricing and where the market is in the real estate market. And what we found is over time, they tend to track closely with small cap stocks. And so we do hold an allocation to small cap stocks, but since they end up historically anyways, have tracked so closely, we just have made the decision that right now we're not recommending them. And most of our clients, the ones that do have alternative bucket allocations, when we've talked about real estate, a lot of them already hold a couple rental properties or maybe just a couple houses that they use, for their personal use, and they don't feel the need to add additional exposure to the real estate market. I'm sure there are plenty of clients in our firm that do hold real estate or REITs specifically, but I actually don't have any right now.
Yeah, I would say I don't either. Think of a REIT as a little bit more of an open opportunity to invest in real estate. I mean, traditionally, real estate is you go and you buy an apartment building or you go and buy a house and, you charge rent and, you have all these additional costs. For a REIT, a little bit different. You invest in the fund and the fund goes out and, gets those opportunities and you're just kind of a profit sharing part of that. With that comes tax burden, depending on how much you're in. So I would say it's a little bit more of an open opportunity to invest in real estate. Comes with a little bit of a cost though, but not to say it's a terrible investment, but kind of like Mallory said, we take the stance that it tracks a little bit, more to some other asset classes that we invest in anyway, that we believe is going to provide better outperformance or performance relative to markets or benchmarks. So.
Okay, thanks. I appreciate the insight on that.
Of course.
Okay, I'll go next.
Sure.
Bitcoin, what is it? Is it digital gold? What do you guys do when you have clients come to you and say, I want to put a 10% allocation in Bitcoin?
You mean, what did I tell my client the other day that said he should sell all of
Yes.
his, large cap stocks and go into Bitcoin because it hit 40,000? Yeah, no. I've done a little bit of research because I have clients that it's a growing topic of discussion. Obviously, because there's a lot of market coverage for it. I wish I could tell you that I've been an expert in it and I could really understand it. I still don't necessarily understand Bitcoin because it doesn't seem like it holds that much intrinsic value. You think of what Bitcoin should have been, what its purpose was when it was invented was to be an alternative to cash, where you would go and purchase stuff with Bitcoin. What we've seen in the last, I would call 3, 4, 5 years is Bitcoin's now just another asset class at high level asset class that people are investing in to take advantage of big market swings. So you really get into that kind of difficult discussion of, does it have intrinsic value or is it just something that people are chasing? Given the high volatility that we see, hits 40,000, then drops and crashes, the next few days. Given how unregulated it is, there's a lot of big brokerage firms, a lot of the big brokerage houses just don't support Bitcoin on their platform because there's a lot of fraud. There's a lot of just manipulation within that quote unquote currency or asset class. From our perspective, we try to, keep our clients, I wouldn't say keep them away, but really try to, understand what they're trying to chase with Bitcoin. Is it because you really want to get another additional 10,000 per Bitcoin, or, you think you just want to be in it, with the rest of the Joneses kind of thing? I don't know if you want to add to that, Mallory.
Yeah, no, that was good. The only thing I would add is, you mentioned if they wanted to invest 10% of the, I wouldn't recommend typically my clients invest 10% of their portfolio really in any one thing, like specifically Bitcoin, but any stock or anything like that. That's just a really high concentration in one thing, especially something like Bitcoin that, is kind of just the big unknown. Cam mentioned he doesn't understand it fully. I don't understand it fully. I don't think really most people understand it fully. So I do have a couple clients that have a very small investment in it. It's not something that we manage. They asked about it before they bought it, and we talked through some of these considerations and these risks that exist with it, but they ultimately decided they still wanted it just because it was kind of the hot thing, and it's fun for them to track, and that's totally fine. They just need to understand it could go to zero. You may never get your money out of that. And so making sure that they understand that up front and keeping that allocation to it relatively small so that it's not going to, inhibit their like retirement spending or their financial independence or anything like that. Just making sure that if it does go to zero, none of those things will be compromised up front.
Awesome. Thank you. That's really helpful. Quick follow-up. So if you do buy Bitcoin for that client, do you do it on a Charles Schwab? What platform do you use to do that on?
I don't know. So we haven't, at least none of my clients, we have not bought it for them. They've gone out and gotten it through some other
compliance
site.
department wouldn't necessarily be happy with us if we did that.
No.
I know there's Cash App does it, Binance. There's other like smaller kind of shops that do it. Schwab, Fidelity, TD Ameritrade, they all still don't support it. And to be honest, in my opinion, I don't think they're going to support it for a very long time, if at all, just given how unregulated it is and how risky it can be.
Thank you. Awesome.
I got another question in the chat. Which management softwares do you use for building client portfolios? So Morningstar, Fidelity, Wellscape, Advisor 360. Good question. Morningstar we use for kind of analytics on different stocks, different mutual funds. So if, a new client opportunity arises, we usually, the first thing that we do is we go and we have a Morningstar direct account from our investment research group, and they go pull, a sector list of, what they're in now. They go and pull all of the data on the current mutual funds, and we kind of do an analysis on, how they're positioned and where we think we can add value. So Morningstar is definitely something that we're always in. On kind of the more client-facing side, we actually just implemented a software called Black Diamond. It is a great portfolio investment management tool. We've loved it. There's been some hiccups down the road, but always is when you implement a software. But it really just is a data aggregator. Helps us really spit out, different transactional stuff, performance relative to an overall portfolio instead of kind of individual account stuff. From there, Mallory, what am I missing?
I think you're missing really any of the big ones. Yeah, I mean, we typically, for like a custodian, you mentioned Fidelity Wealthscape, we typically use Schwab, but we have clients at a million different custodians. Yeah. And if, a new client hires us and they are already using a couple other custodians that they're just comfortable with their platform, then that's perfectly fine. We can keep the assets there and manage them really at just about any custodian.
Yeah.
I have a little bit of a different question, and Cam, I think you'll be able to weigh in on this. But I wanted to ask, like, kind of what your experience has been studying for the CFP and that whole process. So, like, studying, getting ready for the test, everything like that.
Yeah, good question. So I took a little different track than all of you probably that are in the wealth management program. So perfect timing on MSU's end. They implemented the wealth management track the year I graduated, so wasn't able to be involved in it. So you have an educational piece, and then you have the exam, and in between that, you kind of what I call the crash studying or the crash course. So I did a program through OU that's very similar to MSU's track, where I get my educational credits. I forget how many hours I had to get. But I did that for 3 hours every Wednesday for a year until this January. I know that there's other advisors I work with that are studying as well that do the online platforms like Dalton or Kaplan or CFFP. And then, so that kind of gets your educational bucket, your hours, and that's where your wealth management track comes in. And then you kind of shift gears into a crash course. So right now I am currently studying through Dalton's study materials. There's 5 separate books for each module. So right now, I'm about almost a month into studying. I'm through 3 of the books, started my 4th yesterday. Really just take 2 to 3 hours every night after work. I really try to be diligent with, hopping off at 5 o'clock and making sure I have a few hours at the end of the day to study. Really read through the materials. There's a Q bank that Dalton has of over 2,000 questions that I'm going to plan on going in, the weeks leading up to the exam. And then, obviously there are different windows that you can take the exam in. So I believe it's like March, July, and then I think it's October, November.
November.
So I'm taking November.
Sorry,
so I'm taking it. Yeah. I'm taking it in March, for this year. So, yeah, I hope that kind of answers the question. I'm trying to take I really tried to structure it so I had about 2.5 months before I took the exam to really sit down and hit the crash course. And I try to do a little bit each day, and then I give myself 1 day a week where I don't touch it at all, and I kind of give myself a break. So really just try to stay disciplined to that model. Hopefully it works out for me. I know other people kind of are different in how studying works. I have written 700 flashcards probably at this point because that's how my brain functions. But I think, hopefully that helps. Hopefully that helps kind of answer, answer your questions.
Yeah, absolutely. And then I just wanted to ask, do you like the Dalton program? I know that's the only one you used, so it's hard to compare, but would you recommend that one?
So I like Dalton. I think they condense everything down to really everything that you need to know. I mean, each book, there's 5 books. Each of them are between 150 pages and 200 pages. They have 5 or 6 lessons each, and they have, questions in between lessons, and at the end of the exam they kind of have a little practice exam, and then there's a Q bank. I believe it's 2,000 questions that I get online, and it's all from previous exams, all from and it's structured so that the questions that you see are harder than what's going to be on the CFP. I have friends that use Kaplan right now. They say they love Kaplan. They're kind of structured the same way. I think it's 5 or 6 different books, same format, same Q bank, kind of thing. So I don't really think you can go wrong with a Dalton or a Kaplan. I know there's Kier out there. I know other people have used Kier, CFFP materials. Mallory, I don't know what you used when you took it.
Yeah, so I had to take like the actual courses to get the credits to sit for the exam. I went through CFFP, so the College for Financial Planning. That was like Plante's recommended kind of process to work through. And then for what Cam calls the crash studying portion, I went with Ken Zahn, which is similar to, it's just really built to help you kind of condense down everything that could be on the exam to what they actually think will be on the exam. And I know actually probably 6 others at Plant that also went through Ken Zahn, and we all passed it. It was very similar. It offered a lot of online questions and practice quizzes and exams and that sort of thing that really helped. And then it also had, at least when I took it, this was a number of years ago at this point, but there was a 5-day in-person class. I took it, it was right across from the airport in Detroit. So I had to stay at a hotel down there for 5 days, but it was just 8 to 5, just like being in school again, but straight through. But it really helped, and you had an instructor there and probably 15 other students who were sitting for the exam coming up. And it just really helped kind of narrow down on what you actually need to know, because I'm sure as you guys are seeing in your classes, there's so much information in each one of the categories that could be on the exam, but most of it won't be.
If any of you are
something like that is really
if any
helpful.
of you are like in those classes and you're stressing about how much material there is, if it's anything like the OU course, just don't get so overwhelmed with the information. At the end of the day, it's a class that they're going to need to do a final on and stuff like that. Like, that's how I've really viewed it. The educational requirements is there so you get kind of a basic foundation, and then your crash course is really honing in on what it is. So yeah, I think one of the resources that I went to right at the start of my educational stuff is I went to cfp.net. It's free for everybody that wants to take the CFP to register. And it actually has a really helpful checklist for everything that you need to do before you take the exam. So like, once you graduate from MSU, you have to submit your, diploma, and you have to submit, your transcript, and then have to certify your educational requirements, and then they have different preferred materials that you can go online and purchase. If you register at cfp.net, they give you a free practice exam before the exam that you can take too. So I would definitely check that out if you guys haven't already. I'm sure Professor Schiestel has plugged that website before, but I think it's a very useful tool to kind of see where you're at and all the steps, and you can see the different exam times and whatnot.
Mm-hmm. Yeah, and in my final like Ken Zahn day, they actually tell you that practice exam that the CFP board puts out there are actual questions from the exam almost without fail. And I remember when I took the exam, I recognized a handful of questions from their website. So it's definitely worth looking into. Also, they post all the ethics and principles that you have to learn, and those are directly on the exam as well. So their website is definitely helpful and worth spending some time on.
Yeah, and I would recommend to print off that you get a formula sheet. So there's a 1-pager. and tax tables that you're given at the exam. So what I like to do is I put them right next to where, you know, I'm studying, and if I have, you know, a lesson quiz or a practice exam at the end of a book, I reference those immediately, because those are the things that you're going to see, instead of, you know, sifting through your pages and whatnot, and really just get familiar with what you're given on the exam versus what you're not given on the exam.
Awesome.
Yep. And last thing to add is my team partner told me, you know, a couple weeks before I took the exam, and really anyone on my team that's taken it, chocolate is supposed to help drive your memory, or jog your memory in the morning. So I remember I was driving to my exam. It was in Grand Rapids and I was in East Lansing. The exam started at like 8. So it's like 6:30 and I'm just like, I've got a bag of chocolate chips, just eating them like crazy. But
I'm taking your advice on that one.
Yeah. Tina swears by it. So give it a shot. Can't hurt.
A message in the chat: is the exam in person or online? So that it is mostly in person. I did a webinar on my like what to expect for the exam, and there are online versions. You have to have your video camera on at all times, and you have to do the whole, you know, MTV cribs of your room to make sure that you're not cheating. You know, have all the materials behind you. But that, I think they're only allowing that if you're like somebody at risk for COVID, or you have some underlying health condition that you need to take the exam online for. Hey,
that's a good question. I was wondering that too. So
I had a quick question. Kim, you mentioned how your education and your professional experience basically gave you the knowledge of what's already on the exam, but the studying is just a refinement and getting down to the fine details of it. So you're not really learning anything new, just more mastering what you already know.
Yeah, I would say the overarching educational stuff is a general, like, here's what you should expect when you're a financial planner. Here's all the, you know, and I'm sure you guys have gone through the income tax book and you guys have gotten the 8 million charts and formulas and stuff that they claim that you're going to need to use when really you use Excel on a day-to-day. So just like knowing the general concept of some of that stuff is good. But you know, your crash course that you're going to buy, whether that's with Kaplan, Dalton, Kier, Zahn, whoever, is really just going to focus on here's everything that you're really going to need to know for the exam and go from there.
Okay, appreciate it.
Yeah. Another question in the chat: what opportunities become available after passing the CFP, and how it can potentially impact your role at Plant? And I'll kind of shift that question over to just in your like general workday. Mallory, I don't know if you want to take that one first.
Sure. So at least at Plant, to be promoted to a manager, you do have to have the CFP designation taken care of. Beyond the exam, and you guys probably already know this, but there is a timeline requirement. So you have to be either directly supervised by other CFPs for 2 years, or a practicing financial advisor for 3 years. And so at Plant, obviously that it's really easy to accomplish that, because we're typically not having staff sit for the CFP until they're a couple of years in, because so much of it you do get on the job experience that just directly applies to the exam. So it just really helps. So from an opportunity standpoint, it certainly opens you up to promotion. Beyond that, I do think it goes a long way with clients, because obviously, and those of you that have heard me talk before, I've made this joke before, but I really mean it, that if I were, 50 years old with a few $1 million, I would not trust 21-year-old Mal giving financial advice. But all of a sudden, if now, I guess at that point I'd be 24, but I have a CFP and I've gone through that process, it does go a long way. It carries a lot of weight with clients to show them that you actually do know what you're talking about, at least part of the time, I would say. And so it does carry some weight with them, and gives you a little bit more, I don't want to say respect. Our clients are very respectful, but they do trust you a little bit more when you have that designation, just because they know, or maybe they don't know, but they've heard about it at least, where it is a lot of time spent to get that designation. You can't on a whim decide to take the exam and pass it. It takes time, it takes commitment, and most clients see that. And it's not to say they don't trust you before. I'm sure that Cam's clients love him and he
I
does a
hope.
great job. I know that he does a great job, but at least for some of my
Yeah.
maybe older school clients, I know that it went at
A little
least
bit more
a little way
legitimacy
with
in the
them.
industry. Yeah.
Mhm.
You know, you're not going to go to some Joe Schmo that, you know, claims himself to be the best, you know, financial advisor without a few letters at the end of his, you know, signature on LinkedIn or his, you know, business card. So,
Mhm.
you know, while those things look pretty on paper, it really just helps get a little bit more legitimacy. And obviously when you have new client opportunities in the future, wherever you work, having that CFP designation, being, being registered, definitely kind of takes you a step beyond some of the other people in the industry.
Mhm.
So.
Yeah, and the only other thing I would add to that is, as a CFP, obviously you're held to the fiduciary responsibility. So with prospects that I've met with, or specifically in the last few years, I've started to get that question more and more. Plante Moran as an RIA is already a fiduciary, but not every firm behaves in that way or applies to that. So having the CFP behind us as well is just another layer of, yes, we are fiduciaries and we are held to this standard, and we take it very seriously. So that's become actually more and more important to prospects that I've met with in the past couple of years.
Yeah, it's something that really a lot of clients have started to, now that, you know, the word fiduciary is getting a little bit more used in the financial industry, because they're, you know, I'm not digging on any other specific jobs, but there's a lot of people that are out there for commissions and not, you know, out there for their own dime. It's not what we do. We act in the best interest, and a lot of people take pride, you know, obviously they've built up years and years and years of savings and retirement that they want to make sure somebody that is helping them is actually going to help them for them, not for themselves or for some other package that they're going to sell you because, you know, they get an extra 2% on it, something like that. So.
How often
Good
do you
questions,
communicate
guys.
with your clients? Sorry,
what was that?
How often do you communicate with your clients? Like, is it like weekly?
Yeah, no, that's a good question. I would say it varies by the client. I have a couple of clients that I talk to at least a couple times a week. It's a lot, but that's okay. I have good relationships with them probably because I talk to them so much. And then I have other clients that I might talk to a couple times a year. And it's not for lack of trying, but they're not interested, and they'll just come out and tell you, I don't need to know about all of that. That's why we hired you guys. We've got our own business to run, or we've got other things that we're more concerned with. Just take care of it. Like, we don't care. And then other clients, you know, are definitely more hands-on. So it really depends. I would say on average, I talk to most of my clients at least once a quarter. More, I'd say more frequently than that, but there are those outliers that kind of, you know, is definitely less frequent than that.
You really have to get a feel for what your client wants, right, when you start the relationship. For me, I'm still trying to get used to that because, you know, 2.5 years, I'm still meeting all of my clients in person, or not in person, but virtually and whatnot. So you really feel of how often they want to be communicated. I have a client that doesn't want us to call and wants a quarterly email that said if she lost money or made money in the quarter. And then I have one that meets with us every quarter, and she asks for the alpha, beta, standard deviation of her portfolio. And we talk through that for an hour and a half. So really both opposite ends of the spectrum. But really just, it really depends on the client. And again, it's their money. They want to hear all the information. They hire you and pay the big bucks to do so. So.
Thank you. Appreciate it.
Yeah.
I know we're getting here on 7:30. Does anybody have any more questions for the Plante Moran team?
I had one last question, just going back to like the certifications. I'm a freshman, so I'm pretty new to all this. So can you guys explain the difference, or if it's worth it to get the CFA and the CFP, or like the difference between those two?
Sure, good question. Cam, I didn't know if you wanted to, but I can take it.
Jump in, yeah.
So CFP, obviously certified financial planner. So for Cam and I in our role, we're really on the client service facing side. So we're the ones meeting with clients and really expected to have kind of at least some background in all of those areas. So estate planning, insurance, a lot of them have questions about education savings plans, investments, all of those things. And so any one of my clients on any given day will call with a question. Most of the time it's not related to why is the market up 30 or 30 basis points today. That's your kid is about to graduate and she just got a scholarship, but I have this 529. So it's more of those things. So in our role, the CFA is really more for our investment research team. So they're the ones doing the diligence and kind of reviewing different sub-asset classes and alternative investments and that type of thing. They're still meeting with clients sometimes, but definitely not as frequently as Cam and I would be. So they're much more focused on the markets and data driven than Cam and I would be.
Yeah. And then there, from there, there's dozens of other designations that you can get out there. One thing for Plante Moran specifically is if you want to be on the partner track. I don't know how long, Mallory, you could probably correct me on this. Within a certain amount of years, you have to get a second designation that really hones in on what type of client or what type of area you really want to specialize in. So CFP gives you the broad aspect. From there, there's, CPWA, Certified Private Wealth Advisors, CIMA, which is more investment management. There's more insurance stuff. So it really depends on where you're going to go and kind of what client, base you're looking at, or kind of what sector or industry that you want to be in the financial field. That's a little bit more down the road. So hopefully that answers your question there.
Yeah, that's great. Thank you.
I'm going to shamelessly plug the WMA podcast. I dropped the link in the chat, but on the first episode, so Professor Schiestel's actually a CFA. He doesn't have his CFP, and we asked him that very question. So if you want to learn a little bit more too, he goes a little bit deeper into that. It's a great perspective from the CFA side.
Yeah. I listened to that podcast, actually. It's pretty good. I listened when Rob Forte was on it. That was awesome.
I listened to Jackie's too.
Oh, nice.
That was pretty good. So
thanks, guys.
Yeah,
season 2.
I also linked the Ben Carlson episode too. So I guess great minds think alike.
Awesome. Well, thank you guys so much. I think that probably does it for questions here, but I know I'm going to end the recording.